Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, January 11th. Okay, guys, I hope you had a really good weekend. Hope you recharged your batteries and are raring to go for this week. Friday is January OPEX, so the regular options for the January chain will be expiring on Friday. Normally, OPEX is a bullish week. So we got to keep that in mind as a backdrop. It's nothing's 100%, but usually the option positioning has a tendency to either be bullish or neutral, as the positions have built up in certain strikes, in and around where price is trading. So that tends to, keep it within a fairly narrow range or to the upside. Usually don't see a big rug pull on OPEX week. I mean, it's certainly possible, but it's not as likely as a drive higher. Now, the week after OPEX, next week, is totally different. Then I think, given the stretch conditions that we're at, next week has a much higher probability of being an inflection point after the January expiration rolls off. Now, I titled this morning's piece Stretched, and I just want to, before I get into the charts, show you some of these indicators that I look at, and one of them is the percent of stocks above the 20 EMA in the various segments. So here's mid caps. You can see that we're up here in this between 80 and 85. It can certainly stay up here, longer, but it's a place where it often will, roll over and then, come back into this 65 to 50 range, and then, either find support and re-ramp or whatever. But so we're extended on the mid caps. Let's look at the rest of the segments. NDX here, we're at 80%, still well within the normal range, but at the upper end, so we're, near this 85. And, over this last month or so, we know that money's been flowing into small caps and not necessarily away from big cap tech, but certainly enough to the point where they have been underperforming to a certain degree. So you don't see this particular market segment stretched like the others. So let's look at small caps. And you can see here 90% of small caps are above their 20. And, it's hard to sustain that level. We're at a point now where, anything is probably going to be lower. There's not much. What are you going to do? Go to 100%? So, it's really stretched to the upside. And you can see that on IWM. And then looking at the large caps, the XPX up here at 79. So, again, in this upper range. So, to make a long story short, we all know we're stretched to the upside after, the vaccine news and the Santa rally into year's end. That's in the rear view now. We know Biden's going to be president. We know, Democrats hold all the legislative branches, the presidency, Senate, and House. So they're going to have the ability to kind of dictate what's going to get done. And as we talked about over the weekend, there'll likely be more stimulus coming. So it's a matter of, do stocks roll over in the face of what they know is coming in terms of more fiscal stimulus and more COVID relief packages on the way? Or do they, kind of hold the line? Now, one thing I mentioned also on the blog post this morning, everybody is getting their stimulus checks. I got mine on Friday. A lot of the traders in the trading room said they got them, last week. So those $600 checks are hitting a lot of accounts. And we know that retail has been very active in the markets, over this COVID period. So, does that mean they all go out and buy calls this week because they got $600 more? Time will tell, but certainly has the potential to be, more of a tailwind. So we're going to have to watch that. So let's quickly go through the indexes and the FATMAAN names. SPY 2-hour chart closed at the highs on Friday. Now this morning we're down about 0.6%. The last time I looked, I'm starting the video here at 7:30 in the morning. I've drawn a dashed intermediate trend line off the recent lows, and I think you can stay long against 376 where we have this gap here and also the prior highs. So I think, as long as price holds that 376 for active traders, you can be looking for, long entries. But on a break below 376, then it would obviously favor a gap fill a couple dollars lower down to 374. We've got another layer of support coming in at 372. And then if that were to fail, then it's back to last Monday's low down here at 367. So some very well-defined levels there for you to shoot against. SPY 30-minute chart, we see more clearly this wedge pattern that has formed on the 30-minute chart. Watch for breaks of this wedge to the downside today. And then, once that rolls over, if you're trading on real short time frames, that would be your sell signal on a break of this wedge, and that would point to, here's the gap down at 376, a potential fill there, and then a potential move down to this 371 level. So we'll have to see if that ball gets rolling downhill, but things are still bullish now. We don't have any big sell signals, as a backdrop. So I would still be favoring the long side for now, unless you get confirmed sell signals. If these levels start to break, then of course you can tactically get short and look for, the lower levels. Qs finished strong on Friday. Again, they are off about 0.6, 0.7% as I'm starting the video. 314 is your 2-hour pivot. Anything north of 314 on the 2-hour chart is bullish. If you break that level, then basically $2 increments. We've got a level at 312. We've got the top of the gap at 310. And then we've got a gap fill at 308. So those are some nice levels on the downside to look for as targets should 314 break today, at any time. And then that 307.50 at the bottom of the gap corresponds to these lows back on Monday last week. And then I think this was Wednesday, if I'm not mistaken. So all these lows line up at 307.50 should this, kind of roll over today or in the days ahead. 30-minute chart. I've got an intermediate trend line here for you to use as a gauge. Finishing near the highs, I think you can certainly be long against this intermediate trend. And you can see that, 314 is way down here. So there is some downside, potential here today if this trend, it all starts with the break of this trend line and then the break of 317 and 316 to, get some downside momentum. But we'll just have to play that by ear, play it level by level, play it straight. Don't get over your skis. blah, blah, blah. You know how we trade this stuff. So just go level to level, very objective, and don't get carried away with, any bull case or bear case. Just use your regular exposure, what you're comfortable with on your active trading, and it'll be fine. IWM is extended. We can see that, last week it dropped down and has since recovered this very well-defined up channel, going way back. And so here we've got a very interesting level right here at about 205, where this intermediate uptrend line and the lower part of the channel coincide. So if that were to break there at 205, and we'll see it in the 30-minute chart, but then you would have a 2-hour sell signal, and you'd be looking for 200 on the downside. Here you can see it a lot better. So, Friday we came down, we hit this 205 and bounced and closed up near 208. Now today we're down, 0.7%. So down here towards 206. If we were to lose 205, then the next stop is 204. But look at this big void here under 204. I think that would be a more of a unidirectional trade. And what I mean by that is, here we've got intermediate support levels, where you could come down to 206 and bounce, and then, come back down to, 205 and bounce, 204 and bounce. But once you get below 204, there's not a lot there. So I think definitely, especially if you saw these levels, break and maybe not put in much of a bounce at all. If you got under 204, I would definitely get short there and then look for a quick move down to 200, where there is a $3 gap below down to 197. Now, if you did get short at 204, I would be looking to cover that, as you moved down into 200. I would be shocked if there wasn't a good sized bounce right there. And then you'd have to see, if you've got to bounce and then roll over again. But after a move down here to the prior breakout level, that's going to bounce. And, so I would not be holding that short, into 200 or 199.50. I would, take it off the table, and then you can re-enter short if price moves into this gap. Facebook, all the, as we've been talking about, the FANG names, FATMAAN names, aside from Tesla, has been pretty soggy. So here, didn't do hardly anything on Friday. I think 266 is still your pivot. Anything below 266, I think there's an opportunity to be short. Anything above 266, I think you can be long and look for a move to 270. If 270 were to be recaptured, I think you can stay long or get long and look for 273.50. But it closed right in the middle of the range, around 268. So, like we always say, that's not an objective level to be either long or short unless you're very good, at the opening candles. I would wait for price to move towards one of the objective levels to decide if you're going to get long or short. Apple, 131 is pretty clear as a pivot point. I think you can be long against 131 and look for 134. If 134 is recaptured and taken out, look for 138. But if it rolls over and loses 131, I think you're going to come back to 128.50 and potentially 126.25. So we'll have to see. I didn't put the fibs on it, but what you could do is, put your fibs on this, down move, and then see where your 50% fib retracement line comes here. That would be your, your half back short entry for this Fibonacci bounce, where it could potentially roll over, and so you would have a line to shoot against the 50% fib wherever that may come in, probably somewhere around 133, I'd say. Tesla, stay long against the top of the gap right here at 838.40. I think you can stay long against that level. If price moves into the gap, you've got a $20 gap to fill, and then you've got this nice intermediate trend line to shoot against on the long side. It remains very, very strong. I wouldn't try to be a hero and try to short it. It's got a long ways to go, to get some real sell signals, not little, tactical. I mean, you can try for a $20 gap fill. That's fine. I'm talking about more of a duration trade. You don't want to try and short the strongest stocks in the market. You want to short, if you're going to go out in time, if you're going to buy duration, go out in time on a weak stock that's shown nothing during this bull run. And, if the market rolls over, those stocks are going to, accelerate to the downside. So if you're looking to work in some shorts, which I am, look to the weak names. And in the blog post, I cited FedEx as an example for whatever reason. I mean, I have no idea what the reason is, but it has lost key support and is now, looks to me like targeting the 200. I mean, that's a name I want to short because it's already starting to roll over. It's already lost a key level, and I've got a very clear level to shoot against. Now, that doesn't mean it's going to work, but what it does mean is the odds are in your favor of shorting a weak stock. So don't try to short the strong ones and try to call a top. Short the weak ones with the anticipation that they're going to become even weaker. Microsoft, 220. Right here is your pivot. We had a run on Friday into 220 and it got rejected, and you got to move right back down to 217.50. So that, I mean, if you were nimble and you were working that was a nice trade. Once it punched through 220 and then reversed, you had a very clear level to get short against. And then, as we always say, back into a trading range favors the bottom of that range. So it did go to the bottom of the range, which was 217.50, and then back up at the end of the day. So 220 is your pivot. Be long above, and if you see weakness at 220, you can be short below. I think if it were to lose 217.50, then you've got a lot more downside to play with if it comes back into this trading range. And I would be targeting like 214, 213.50 where this gap is. And if that were to fail, then you're looking at a gap fill down to 212. Amazon stuck in this trading range. If price were to recapture and hold 3,200, I think you can be long there and look for 3,250. But if it can't, then it's going to come back down to 3,150. And that's really been, we've been calling it the free 50 club. 3,200, 3,150. 3,150, 3,200, 3,200, 3,150, 3,150, 3,200. So, I mean, that's the free 50 club, right? Buy support and sell resistance. And if if you're comfortable with Amazon, it's not the easiest one to trade. And this is all hindsight, of course. But it has been toggling within that $50 range. And really all along, these $50 ranges have worked very well for support and resistance and targeting and stuff like that. So I'd key off at 3,200 and 3,150. Google, we had a very nice read on this on Friday. We had postulated that this was a bull flag and that on a breakout was going to go to the top of the box, and that's exactly what it did. One of the stronger names on FANG on Friday. So you got that move from the bottom of the box, fake breakdown, recovery, move up to halfway, bullish breakout from the bull flag, and then a measured move up to 1795, 1800 area. Now here at the top of the box, a break and hold above targets the prior high up at 1840. But if it breaks out and then falls back below, then your target becomes the bottom of the box again. So if you see a breakout like to 1805 and it rolls over and then comes back in to 1795, 1790, get short there against 1795 and hold on and see if you get a move, first down to 1755 and then down to 1720. That would be my expectation. Netflix has been very quiet. It's toggling in this range between, 507.50 and 513. So, it really has to break this range to either fill this gap above or fill the gap below. If you're comfortable trading or, taking a position either at 507 or 513, that's fine. But what I want to see is a break above and then this gap fill up to 520, or a break below and a gap fill down to 500 to kind of, break the ice, get the momentum going in either the upward or downward direction. I think I shared with you last week, this is that MicroStrategy. Yeah, this is the company that's putting all their assets and actually raising more money and buying putting Bitcoin on their balance sheet. And this has been the parabolic move that mirrors Bitcoin. And I don't know if you've seen the news this morning, but Bitcoin's down 20%. So, parabolic moves usually don't end well. So 20%, on MicroStrategy, that'll be down $100 down here to 400. Really doesn't even really dent the chart, to be honest with you. 500's here, 400's here. And then what we want to see is, does it come back down to 275 or kind of build a support level here at 400 and accelerate higher. Now, the reason that I'm using this as a proxy is it's got a pretty good option chain. And if you look at, the Grayscale Bitcoin Trust, there are no options for that. And, I personally don't have the capital to, be out buying, the Bitcoins themselves. So I'm going to try to, pick a spot somewhere on this MicroStrategy chart to either take a long or short position based on, the technicals. So I'm going to try to do that. I'll pass that along. They will be really expensive just because of the volatility of Bitcoin itself. So those are going to be expensive options. Probably, for me, probably, one or two will be the limit of what I can, afford and justify from a risk standpoint on trying to play Bitcoin. But I'm just going to watch it here for a while and see, see what develops as far as finding a support, finding a good entry, and then we'll take it from there. So let's watch it today. It looks like we got a little red on the board. We'll see if OPEX week turns out to be bullish with the positioning and everybody getting their stimulus checks. I think we've got some really good levels to work with, not only on the indexes but also on the FATMAAN names. So I'm looking forward to a good week of trading. So if you're new to the channel and found the information helpful, why don't you join us? Hit the alarm bell, hit the subscribe button. You'll get all the videos that I produce. And if you look over in the show notes, there's links to the blog site and also how to register for all my content, where you'll receive a nice email in your inbox and you won't miss a beat. We'd love to have you. And also you get an invite to our trading room on Slack, which has really been nice lately. A lot of nice sharing, camaraderie, teamwork, ideas, resources. And what I tell people, if you've got a full-time job, don't let that stop you. You can come in the trading room at any time, on the weekend, after hours, midnight. We got people in there all the time that are posting, and you can just flip through the posts and see if anything catches your eye. You don't have to sit there, during the day and, participate live. You can get a lot of benefit just by, gleaning the ideas that are posted, and it might stimulate some good trades at your end. So that'd be great if you would join and be part of the team. So let's leave it there. I will reach out midday and end of the day, especially if we see something noteworthy. I will send out an update. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.